If there was a missing piece of information that is costing you money now, or could cost you money in the future, when would you want to find out about it? Ideally, you would want to learn about it right now. It's best to learn these critical facts before you make any financial decisions, because not knowing could have profound effects on your financial future. One of the best ways to make money is to avoid losing it in the first place. So we focus on all the missing facts to keep your money from falling through the cracks, and we engineer tax strategies to reduce burdens on your income. Welcome to the Roadmap to Retirement podcast with Ken New from Pinnacle Financial Wealth Management. As a fiduciary advisor, Ken focuses on creating individualized holistic plans rather than cookie-cutter portfolios. Listen in as Ken and his guest experts explore key retirement and tax strategies that every pre-retiree should consider to reach their pinnacle. Now, onto the show.
Balance in a portfolio can ease stress and risk. And Ken New is here to talk about that balance, which can also be known as diversification. I'm Patrice Sikora. Portfolio diversification plays a key role in mitigating risks as part of a proactive and holistic retirement plan. Ken, let's start with the basics, please. Explain what portfolio diversification means in the context of retirement planning.
Sure, absolutely. So portfolio diversification is a strategy that involves spreading investments across various asset classes, therefore reducing risk. In the context, though, of retirement planning, it's about creating a well-balanced investment mix that includes stocks and bonds, real estate, and alternative investments, all managed under a central approach. And diversification allows retirees to reduce the impact of any single investment's performance on their overall portfolio. So what it really means is don't put all your eggs in one basket. Diversification allows us to spread our investments across various asset classes and reducing the risk of relying too much on any one investment and potentially losing it all. Now, this doesn't mean your financial advisor is a basket, and you should have multiple advisors all over the place. In fact, it's just the opposite. Your advisor is the one who grants you access to all these baskets. And the advisor will help you allocate your eggs appropriately into the different baskets or the financial strategies that may be needed to spread your wealth and protect you best. So when we look at the total portfolio and consider all assets, we gain a holistic view of our client's financial situation. This allows us as financial advisors to develop a comprehensive plan that takes into account all aspects of their financial life, including retirement goals, risk tolerance, and their liquidity needs. So by considering the entire portfolio, we can ensure that each investment and financial decision aligns with the client's overall objectives. On the other hand, though, a transactional approach of investing only a portion of the portfolio at a time may lead to a fragmented decision-making and lack of coordination among these investments. By taking a holistic view, it allows us to optimize the portfolio's diversification, minimize the risk, and provide a more integrated, effective financial plan for our clients.
Well, Ken, that does sound like a very smart, reasonable approach. But how does diversification contribute to the safety of principal and wealth preservation for retirees?
Yeah, that's a very key question. Very great question. So diversification is key to safeguarding one's wealth because it keeps and helps mitigate the risk of significant losses in any one single investment. For example, if a retiree's portfolio is heavily concentrated in a specific sector or an asset class, and that sector experiences a downturn, their entire nest egg could be jeopardized. However, by diversifying across multiple investments and asset classes, retirees can spread their risk and potentially minimize the impact of any individual investment's poor performance. Look, we all know that the stock market is volatile these days.
Mm-hmm.
So I intend to specialize in diversification through many avenues, but specifically with alternative investments.
Well, what do you mean when you say alternative investments, Ken?
Well, an alternative investment just generally is any investment that is not stocks, bonds, mutual funds, exchange traded funds.
Mm-hmm.
Typically, they're going to be private investments, and they play a significant role for high net worth individuals. When they're compared to traditional stock market investments, they give an alternative to that stock market volatility. While the stock market offers potential returns, alternative investments can provide additional benefits, such as diversification, risk mitigation, and potentially higher returns. The alternative investments include asset classes like private equity, venture capital, real estate, and commodities. And these investments often have a lower correlation to the traded stock market.
Ah, that is key. That is key.
And additionally, alternative investments often have a longer time horizon, which allows individuals to take advantage of illiquidity premiums and unique opportunities that may not be available in the public markets. For example, investing in private equity can offer access to early stage companies with significant growth potential.
Mm-hmm.
Also, alternative investments can provide unique tax advantages, such as depreciation or the ability to offset gains through losses in certain investment structures. Due diligence and careful selection of managers or funds is crucial to mitigate risks and maximize potential returns. In summary, alternative investments offer high net worth individuals the potential of diversification and risk management, gives them unique investment opportunities and potential tax advantages that may not be readily available in the stock market alone. By incorporating alternative investments in their portfolios, these individuals can create a more robust and well-rounded investment strategy.
Now, when we talk about holistic retirement planning, Ken, what are some strategies or products that can be included in the diversification process?
Yeah, so another great question. Holistic retirement planning goes beyond just investment diversification. It involves considering other aspects of a client's financial life, such as estate planning principles. Also incorporating estate planning principles like long-term care insurance and life insurance as part of the overall diversification strategy. And it can provide an additional layer of protection. Like long-term care insurance helps cover potential costs associated with healthcare, assisted living in retirement, while life insurance can provide financial safety and for those loved ones and address estate planning needs.
Okay, so the idea basically is to use various strategies and products, but keep them under a central management to ensure a well-organized and comprehensive retirement plan. How does a financial advisor like yourself help clients? This is a complex process. How do you help clients navigate this?
Yeah, well, that's one of the keys is to be able to work through the nuances of holistic planning. As a financial advisor, I think you play a key role, a crucial role in helping clients navigate the retirement complexities. I bring my expertise to the table, work closely with the clients, and understand their goals. In other words, listen to them and understand what they're trying to accomplish. What's most important to them? What are their greatest risks? What are their greatest challenges? And that risk tolerance and that financial situation then can be molded together to come up with a plan. By analyzing these factors, I can develop a tailored diversification strategy that aligns with the client's objectives. I guide the clients through the selection of suitable investments, help manage the risk, and help them to understand the risks, and regularly review and adjust the plan to ensure it remains on track. I also work within the network of other professionals in their prospective fields to benefit my clients. If they have a specific planning need where I'm not necessarily the expert, I can refer them to a professional that can assist them with the fullest extent possible. And I'm alongside my client to advocate in their best interest.
Hey, sorry for the interruption. I know you're listening to the Roadmap to Retirement podcast, and I'm so happy you're here. If you have any questions, please head over to www.pinnaclefinancialwealthmgmt.com or the show notes to find out how to reach us. We would love to hear from you.
Well, Ken, it's clear that your role as a financial advisor can be very invaluable in this process. It is invaluable in this process. But do you have any final advice for our listeners who are approaching retirement and want to ensure their financial well-being?
Yeah, absolutely. I mean, we have really taken this an inch deep and like a mile wide. And we could, in fact, just go a little deeper on a couple of the concepts. Generally speaking, as an example, in this idea of diversification, there's no real hard, fast rule to diversification. Each economy, each phase that we have in the economic cycle can produce different strategies than you would typically see in the past. Give an example. If we're diversifying into real estate, it's not much of a stretch to imagine that all real estate is not created equal. In fact, all real estate in any area of the United States is not created equal. And as an example, in today's world, inner city office probably is not a very good place to be. Still a lot of work from home initiative out there. A lot of this space is vacant, and that may be opportunistic for someone who has a risk tolerance that might be speculative or aggressive, or at least moderately aggressive. And the typical retiree may want real estate that has more certainty to it, a little bit more of the metrics that make them feel comfortable about being in the real estate sector. And so as an example, then, instead of industrial or office or certainly strip mall kind of real estate holdings, then that type of client may have a better understanding of their investment when it's in housing, especially if we are in housing in what we call net migration states. And I live in Florida. And so we are considered a net migration state. Why? Because more people are moving here than moving out. And we have more job growth than job loss. In other words, that is a good formula for we need more housing. And it is going up in cost and it's going up in need. And there's a lot of demand for it. And not just in Florida, areas of Texas, of course, Tennessee, North, South Carolina, Georgia, and these kinds of markets would have an advantage more for that person who looks at the real estate sector for what it's designed to do, which is cash flow, and have steady cash flow so they can get paid. And then when they exit their position, there's potentially that uptick in value and overall investment return. So that gives us just a layer deeper in maybe the selection process when we think about this idea of diversification and using real estate as the example. Did that make sense?
It did. It absolutely did. And you make some very good points there. Regularly reviewing and adjusting the plan is crucial, especially as retirement is getting closer. But then that also reminds me of the line from the TV show Friends. Remember when Ross had a self-invented system that was going to help him deal with his divorce, a messy divorce. And he said, I'm fine. I'm completely fine. I'll be fine. Really, I will. I'll be fine. You know, I'm going to be fine. Fine, 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 fine. Yeah.
Absolutely. That's a hilarious reference, Patrice. And just like Ross, sometimes we might think we're fine. But it's really crucial to regularly review our retirement plans. Let's just take a pause for a second. Right now, there's a lot of volatility out there, and there's a lot of unknowns. We've got interest rates tipping up, up, up. We've got this idea that the dollar may be replaced by other currencies, that we may go to digital dollar. These are reasons really to re-engage with our clients and for our clients to reach out when they're feeling fearful, especially if they see some of their investments show some volatility. And to be able to have that conversation with them about how an investment is performing and reviewing that regularly and how it now correlates to their retirement plan, and help them to make adjustments. There could be life circumstance changes as well. On top of all these things that I just mentioned, what if there is one of these events that's happening within the family, a life change, I'll say? And it's important really to ensure that we review those financial strategies and renew whether those alignments and those strategies are aligned with their overall goals.
Absolutely. And while we don't want our listeners to end up like Ross repeating, fine, 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 over and over, we do want them to have a secure and enjoyable retirement. So remember, seek professional guidance, review your plan regularly, and make necessary adjustments to stay on track.
That's right. That's right, Patrice. Retirement planning doesn't just have to be as complicated as Ross's relationship status. With the right guidance and a proactive approach, you can have a solid financial roadmap to navigate their retirement journey.
That is so well said. So thank you so much for joining us today and sharing your expertise, Ken. It's always a pleasure having you here and speaking with you.
Oh, thank you. I always have a great time being on the show. Remember, everyone, plan early, diversify wisely, and enjoy your roadmap to retirement.
And that is a wrap for this episode of Roadmap to Retirement. Thank you to all you listeners for tuning in. And until next time, take care and keep planning for a secure and fulfilling retirement.
Thank you for listening to the Roadmap to Retirement podcast. Click the follow button to be notified when new episodes become available. Visit our website at www.pinnaclefinancialwealthmgmt.com or give us a call at 321-454-3623. Securities offered through Center Street Securities, Inc., CSS, a registered broker-dealer and member of FINRA and SIPC. Investment advisory services offered through Center Street Securities Advisors, CSA, a SEC-registered investment advisor. Pinnacle Financial Wealth Management, CSS, and CSA are independent entities. Discussions are meant to be general in nature and may not be suitable for all investors. Please consult a tax professional regarding any tax implications.